Hey, good afternoon, folks. This is Jeff coming to you from Florida. Um, I want to take some time today. I'm producing two videos today to talk about two new scanners slash reports that we have on the Man versus Market Discord channel. Now, I will post a link to the Discord channel uh, on YouTube when I post these videos. I'll also post these videos on TikTok. If you haven't been following me, I started the Discord server about 2 months ago because I built quite a following on TikTok. I'm up close to 23,000 followers now. And just a quick background in terms of who I am. I have been trading actively since about 2001, so that makes, 25 years now. Um, I have a background in computer science and also a dual degree in finance. Uh, and From 2001 through 2015, I was the chief information officer for a hedge fund. And I worked very closely with the owner and chief strategist at the hedge fund, and I learned trading from him. I sat next to him in the office for 15 years, typically 12, 14 hours a day, and I learned quite a bit from him. So that's kind of my background in trading. I also have a degree in computer science, and I worked for him from 2000 to 2015, and then I left and spent the last 9 years working for one of the world's largest consulting companies, exclusively with finance companies, companies like Vanguard, Fidelity, BlackRock, Standard and Poor's, Swift, the name goes on finance IT related projects. And I retired last August. And at that point, I started spending all of my time trading and taking what I had learned over the years and developing a number of reports, some rules driven, some AI assisted, that helped me pick the winning stocks. Now, one thing that has become blatantly clear, I have close to 23,000 followers on TikTok, but over the last few months, more and more of my followers are asking me on a daily basis, Jeff, what are the most stable stocks to get into? What are the best long-term stocks to get into? Because the heat stocks, I'll call them heat, the highly volatile stocks, like the semiconductor stocks, are just all over the place. And you can get, uh, some people I follow call the last couple of months chop fest. So you can get chopped up pretty quickly in the market nowadays if you don't know what you're doing. So the entire idea and concept behind me putting together this Discord channel is to, number one, help a lot of fledgling investors find the right stocks to invest in. And then also provide for those who are willing to put some skin in the game, and trust me, it's not a lot of skin, a number of more detailed reports that help my followers and my members develop curated lists of stocks to buy. So one thing that's become readily apparent is that it's easy to get chopped up in the market nowadays. Like I said, it's called Chop Fest. So, based on the fact that I have about 23,000 followers, on an average day, I get somewhere between 150 to 200 messages on TikTok asking me, what are the best stocks to buy long term? What can I buy short term that's not going to be volatile, that's not going to kill me? And my trading background is mostly growth stocks. I tend to follow growth stocks. I'm a CanSlim trained investor, an advocate of Bill O'Neill and the CanSlim style of trading, where you pick stocks they're moving up, that have good fundamentals, good technicals, that are being accumulated by funds, make money in the short term over a few weeks or over a few months. But one thing has become blatantly clear is that there is a need right now, and all of my followers are clamoring for it, to get directed toward what I would call defensive posture stocks, and then also buy and hold stocks, stocks that you can just buy and hold and sleep at night. So based on that, I've created, and I've been working on these reports for over a year, but in the past 6 or 8 weeks, I developed 2 new reports. One's called the defensive posture stocks, and the other is the buy and hold stocks. Now, you can join my Discord channel for free, and on a daily basis, you get my daily stock picks and you get my overnight gappers. This is a list of stocks that gapped up overnight. And typically in up markets, they continue, but in Chop Fest, it's anyone's guess whether they go up or down. The daily stock picks is probably your best bet. But for only $4.95 a month, you can get access to all of my premium channels where I give you a lot of detailed reports. This is on a daily basis, right? And that price, $4.95 a month, is good until the end of August. Then the price goes up to $14.95. And believe me, you can make $14.95 on one trade in probably 5 minutes in this market. You just have to know where to look. So before I get into the first report I want to cover in this video, which is the defensive posture stocks, I'll just give you a quick rundown on what's available. First of all, we have a premium members chat. I post my trades, right? And I will tell people whether these are speculative trades or whether I think they are good long-term holds or short-term holds. My premium daily stock picks, which is not only equivalent to what I post in the evening at about 5:30 or 6 o'clock, but I also, for my premium members, I give them a daily stock picks that comes at 8:30 in the morning that has been influenced by overnight gap ups or gap downs. I post an accumulation distribution list. These are stocks that funds are buying or funds are selling. You'll always want to follow the money. My breakout watch list, stocks that are close to breaking out. Bounce back stocks. These are stocks that have dipped recently and are back on the rise. Classic pattern stocks are mostly stocks that have a double bottom or a cup and handle. Constantly rising stocks. These are stocks with where the price has just gone up over 1 day, 3 days, 5 days, 10 days, 20 days. They're just continually rising. Now, of course, with any rising stock, there's always a risk of pullback. So these are curated lists. You still have to do some of your own research, right? The next is the Minervini style, what Mark Minervini calls his power play stocks. These are typically high tight flag kind of stocks. And that has proven very, very beneficial to me. I use that a lot. Momentum stocks, right? Some people like to chase momentum stocks, so I have a report for that. Sector rotation reports. Now, I track over 1,000 different what are called industries. There are 11 different sectors in the market, but within those sectors, there are multiple industries. So I track each one of those, and I track it every day. I tell you which sectors or which industries are moving up, which are moving down, and then also what stocks are on the move within those industries. Then next, near the end, I have tightening prices. Everyone knows that tightening prices, or what are called like inside days, typically lead to breakouts. So I give you a list of stocks with tightening prices. And then here are 2 new ones, all right? The defensive posture stocks and the buy and hold stocks. You will not see the test channel or the prediction channel. This is my own test bed. But for defensive posture stocks, I'm going to go over those today. And I'm going to tell you what defensive posture stocks are and how the list is curated. And in a separate video, I'm going to go over buy and hold stocks. So recording is underway right now. I'm going to switch the screen and we will continue. Okay, what I'll do now is take you through what exactly is a defensive stock, right? And it's really talking about a defensive posture. A defensive posture stock is liquid. It's not falling over the past 10 days and ranks high because it's quiet, well-structured, not overextended, holding its own against SPY, and trading with same volume. with a slight preference given for defensive sectors. That's very important. What the report is not, all right? Um, this is a sleep at night resilience kind of stock, all right? So it's not a moonshot. Don't expect this thing to go ballistic on you, all right? Uh, these are stocks that hold up well when the market wobbles, and trust me, the market has been wobbling. These are quiet, well structured names with sane volumes, and sane volumes are very important. People underestimate volume, right? It's not a breakout scanner or a high list or a high beta chase list. Trust me on that. And it's not about catching the next 50% runner, right? So just some basics, hard dates before scoring, right? No stock makes it in here unless it has at least 60 days of price history. It has to have a fresh bar. That means we run this report at the end of every day. The price has to be over $10 per share, right? No penny stocks, no cheap stocks. The average volume has to be over 200 shares a day, so it needs liquidity. So when you put your buy or sell order in, it has to be executed fast. The 10-day return has to be greater than zero. It's got to be flat or up. It can't be falling. And it's not SPY. We're not looking at SPY here. We are looking at individual stocks. Right? Every stock has its own character. They behave in certain ways. That is why looking at charts is so important to understand the character of a stock. And then what we have is called an optional filter. We've developed a technology where we look at how a stock has held up against SPY. Does it defy SPY? When SPY falls, does it go up or down with it? Right? And I like stocks that defy SPY. I like stocks that go up when SPY goes up, and when the SPY goes down, I like it when they defy SPY, and they continue to go up. So they are not as affected as SPY as many stocks are. Right? Then we compile a defense score, and you'll see that on the report. It's a composite score from 5 pillars. Right? There are multiple pillars. Low volatility. I want calm price action. I don't want this thing bouncing all over the place every day. It's not extended. I don't like buying overbought or broken stocks. Right? They just lead to pullbacks. VWAP has to be on the upside. The simple moving average 20-day has to be moving up, and the 50-day has to be moving up. They have to be moving up in unison. All three have to be moving up. Anyone will tell you that these are your best stocks. Relative strength versus SPY, right? So it's got to be out holding the market. The volume quality is very important. It's got to have the same volume, what I call a same volume ratio. And I'll talk about that. And then there's some sector bonuses. They get a plus three for staples, utility, healthcare, defensive stocks, all right? So one of the pillars is low volatility. It's measured by ATR. If you're not familiar with ATR, that's called average true range. That is the percentage that a price will vary on a daily basis for a stock. And we use 21 days as our ATR. Right? We calculate over the past 21 days. Comp stocks sleep better. Lower ATR scores are higher. Right? Again, ATR is average true range. There's a spike penalty. Sudden volatility expansion hurts the score. And then our goal is to find tickers that won't whipsaw you overnight. Right? Next, not extended. Near 20-day highs, participating, not logging, not broken. The price structure is intact. Not manic above 20-day SMA. I avoid parabolic extensions. Stocks that have gone crazy. Stocks that tend to go up rapidly tend to fall rapidly. I want to stay away from those. And I reward stocks in a healthy uptrend, not exhausted blow-offs. In terms of the pillar structure, VWAP side, I like it to close or above the day's VWAP. Right. The SMA, a short-term trend preference. I like the SMA 20-day simple moving average to be going up. The 50-day moving average to go up. Who won today? Did buyers or sellers control the session? I like stocks where sellers control the session, not buyers. All right. And is there the trend intact? Is there alignment across VWAP, the volume weighted average price, if you don't know what VWAP is, the simple moving average 20-day, and the simple moving average 50-day. So the relative strength, does the stock outhold the market? That is critical. Outperformance versus SPY over the look-back window, and we look back quite a bit. More weight when the regime is off. So a relative strength indicator, relative strength, is more important to me when SPY is trading below its 50-day moving average, right? That's very important. And in weak markets, relative strength matters the most. And right now, technically, we're in a weak market one day, we're in a strong market the other. But overall, we're kind of in a weak market right now. It's still a bull market, but it's been so volatile. That's why we call it Chop Fest, right? And volume quality is very important. So the volume ratio is today's volume divided by the 20-day average. So a healthy range is 0.5 to 2.0. If it's less than 0.5, that means no participation. You're just putting in dead money, right? Manic is what I call over 2.0. Speculative frenzy, unstable. Same volume. This is 0.5 to 2.0. The sellers are in control. There's conviction without chaos, right? Then SPY defiance. Over the last 60 sessions, on SPY down days, what percentage did this stock finish in the green? That's what I call high defiance. Holds up when the market sells off, and we tend toward high defiance stocks. It's displayed in the report, and I have the opportunity to modify that. But right now, I select that as typically a 55 or a 60, right? So these stocks have to be 55% defy or 60% defy. That means they can't swing with SPY. They have to defy SPY. It's not included in the defense score by default, right? And I use it. We have to use this as a confirmation filter. The stocks that show up here, right? This is not a scoring pillar, right? So the regime on off, right? So regime on means that SPY is moving above its 50, that is trading above its 50-day simple moving average. Regime off, that means that SPY is trading below its 50-day simple moving average. Now, we will change the scoring based on how SPY is reacting. And you can see what score we give based on low volatility, not extended, what the structure is, relative strength versus SPY, and volume quality. It will vary whether the SPY regime is on or off. Right? And then we have some bonuses. We give plus 3 points for stocks that are in staples, utilities, healthcare or defense stocks, and classic defensive sectors get a higher scoring preference. And then finally, what our cheat sheet is, when we look at these stocks for what we call defensive stocks, is it liquid enough? Is it falling? We don't want that. Is it calm? Yes, we do want that. Is it overextended? No. Is the trend intact? Yes. Right? Does it beat SPY? Yes. Is the volume same? Yes. Does it hold on red days? Very important. Right? And what's its overall rank? Right? And with that, I will stop recording, and I'm going to actually show you an actual report. Okay, now that I have clearly shown you what a defensive posture stock is, I just want to show you what the report looks like. Before we get into that, I'll give you a quick review of the Discord channel, Discord server, Man vs. Market server. There'll be a link to the server right in the video that I post on YouTube. There are two basic memberships that you can have, right? One is the free membership and one is a paid membership. The free membership gives you access to our ongoing stock discussions, a Q&A. You can ask me questions online. I'll do my best to answer them in a timely fashion. General stock talk, and then it also includes 2 free reports. You get a daily stock picks. This is produced every day at 5:30 after the market closes, based on today's or yesterday's activity. Gives you a heads up on what's going on tomorrow. right? And then in the morning, I give you another free report called the Overnight Gappers. These are stocks that have either gapped up or gapped down overnight. So we give you heads up on what's moving, what's not moving, winners and losers. And on up days, the stocks that have gapped up typically continue. On days where the market's down, when SPY is down, they may or may not continue. We analyze our own estimates at the end of the day. So this is a good one to know. Now, for the low price of $4.99 a month, you can become a premium member, which gives you access to our premium channels. Right? Now, that price is only good until the end of August. On September 1st, that goes up to $14.99 a month because, trust me, this is a bargain for what you're getting. And I'll go over what you get. Right? If you can't make $14.95 a month, or if you can't make $14.95 on one trade in one day, you're not paying attention to what we're putting out there. Trust me, right? So you get access to our premium members chat. You get a list of what I'm buying and selling, so you can follow me if you like, right? You get what I call the premium daily stock picks. This is a report that's produced at about 9 o'clock every morning that takes what we published the evening before, but adds to it the gap ups overnight. Right? What effect they've had on those stocks. Right? Next is the accumulation distribution. If you're familiar with accumulation and distribution, accumulation is when funds are buying stocks. Distribution is when funds are selling stocks. So it's good to know what stocks are being accumulated by funds, which ones are being sold by funds. And we tell you that list on a daily basis. There's also a breakout watch list. This is a list of stocks that are breaking out. This is a prediction. I don't do this. This doesn't come out after the market has opened. This is a kind of a prediction model. And stocks have to meet a very high criteria to be put on this list, right? Unless we have at least an 82% confidence that we're right, we don't publish anything in that list. And you'll see, for the most part, on a daily basis, that is empty. No stocks meet the criteria of 82% confidence today. Next, we have bounce back stocks. These are stocks that have dipped and are bouncing back. This is a great source. I buy a lot of these. I don't try to catch a falling knife. I wait for stocks to fall, develop a base, and start to move back up. That's typically when I buy in. Then we have classic pattern stocks. This is a very handy report. It will show you the cup and handles, the double bottoms, and then we use Mark Minervini's volatility contradiction pattern, and we display those also, which is very handy to have. Constantly rising stocks are exactly what the name implies. These are stocks that just won't quit. They were up today, they were up 3 days ago, they were up 5 days ago, and they were up 10 days ago. All right, and they have to have a strong RSI, and we tell you whether they're overbought or not. Right. So here you go, TEX might be a good stock for you on Monday. Right. Okay, Minervini Power Play. If you're familiar with Mark Minervini, if you follow him on YouTube, or if you have any of his books, which I do, I have the Mark Minervini Think and Trade Like a Champion book. It's an excellent book. All right. Mark Minervini has crafted a pattern that is called the Power Play pattern, and we have automated that. So we look at every stock and we figure out whether it fits his Power Play pattern or not. It's detailed. It's very handy to have. It tells you where the stock closed, what its breakout level will be. So this is not a run out and buy the stock report. This is a heads up report on ticker, let's say ALKS. Right now it's 52.89. The prediction is that we'll break out when it gets around 55.67. So you make the decision as to whether you want to buy in or not and when you want to buy in. Because this could be slow moving. It could be only up half a point a day. Right? So you have to track it. And then once you do buy in, what the suggested stop loss is. Right? So very handy report. Next is momentum stocks. I use this all the time. I like to see who has rising volumes and who has rising prices and rising and low ATRs. Sector rotation reports. You'll hear the term constantly about sector rotation, how the money is moving from one sector into another. Well, that's all well and good, but there's only 11 sectors. So how are you supposed to track what's really going on? Well, what most people don't understand is that within those 11 sectors, there are over 1,100 industries within those sectors. And we track stocks in those industries. Now, we don't track every stock that's out there. We don't track any penny stocks. We don't track any stocks that are losers. We track around 1,000 of the most active growth stocks. That's what we track. So if you're into penny stocks, this is not for you, right? If you are a CanSlim style trader, if you like to buy growth stocks that are on the move, that are rising, then this is for you. You know, my training has been CanSlim, and I'm an advocate of William O'Neill, right? So that'll give you some insight into how I choose and trade stocks, right? But the sector rotation not only tells you what industries within sectors are moving up or down, but it also tells you what are the most active stocks within those sectors that are rotating, right? A perfect example here. This is the industry rotation stocks that was generated on Friday evening. And if I pull up this list, it will tell you, all right, what's moving, right? Here, YPF, it's in oil and gas. 2 weeks, there's been strong buying. 1 week, strong buying. 3 days, strong buying. Right? It doesn't get any better than this. Is it overbought? No, it's not overbought. YPF. Go take a look at it. Right? So then, finally, we get to the reports that I really wanted to talk about, which is we have one more, tightening prices. These are stocks with inside days, right? And everybody knows that stocks with tightening prices and inside days often lead to a volume contraction, and that often leads to breakouts. So here are 4 stocks that we picked out on Friday afternoon, right? That might be good on Monday, right? So back to the list. Defensive posture stocks. That is the video that I'm doing today, right? So finally, we get to the actual report. Right? So I'm going to click on the report. I'm going to bring it up for you. Right? So defensive posture stocks. Here we go. Right down the list here. VTR, Johnson & Johnson, Will, W-E-L-L, EOG, MPLX, I own. Johnson & Johnson, I own already. Allstate, I own. FPB, I don't own it. CVX, I do own. TRV, I may get into TRV. Right? AIT, OVV, CFR, XHG, FCG, EIX, PAA, and we tell you how well, where their VWAP is, right? What their SPY defiance looks like, right? 69% of the time. 69% of the time when SPY goes down, VTR goes up. There may be ones in here even higher. Right? Who knows? We look down the list, find out. Nope, that's up top of the list, right? So this is a great report. So if you want something stable that won't keep you up at night, that won't have you worrying, that is on the rise, for all the reasons that I went over in the PowerPoint chart, this man versus market defensive posture report is for you. So I hope this helps you become a better trader. I hope it's giving you some insight into the kind of reports that we generate. For a premium membership, $4.95 a month up until September 1st. Then the price goes up to $14.95 a month, but I believe it's well worth it. There's 20 years of stock trading and research and development have gone into these reports, and I do this full time on a daily basis. This is what I do every day. All right. So good luck, everyone, and thanks for listening to me today.